The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I will be speaking about gold. Now, why do I want to speak about gold? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for gold. And as usual, I will be keeping this as educational as possible. And anyway, it's time for an update since the market has created exactly the move that we wanted to see from our previous analysis. Now, starting here on the monthly, we have a strong impulse and the market has just started this complex correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market here has just created exactly at 0.618 golden ratio Fibonacci retracement, and the market has tested and rejected the zone twice. So on the monthly, everything seems quite bullish. We are rejecting a golden ratio, and in situations like this, you do expect more continuation to the upside. If we look at the pattern, we can also see a potential inverted head and shoulders, with the left shoulder being here, the head here, and the right shoulder here. So everything on the monthly is indicating for more bullish price action. Dropping down on the weekly, what do we see? Now here in the weekly time frame, we can see how the market at the moment is testing and rejecting a strong level of historical structure. This zone was acting as previous weekly resistance here. We then had the break to the upside, turned support here, against support here, against support here. At the moment, the market is once again testing this previous weekly resistance turn support, and we can expect the market to provide more continuation to the upside. So the weekly here definitely seems quite bullish. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily, what do we see? Now here on the daily time frame, I spoke about gold a couple of times. I spoke about it when the market was around this area here, and I made a full breakdown explaining all the reasons for which we wanted to see this move to the upside, and that is what the market gave us. Then we had the move to the downside and correction to this level, and from here I made another breakdown explaining all the reasons for which we wanted to see this move to the upside and for the market to create another daily higher high. And once again, that is what the market did. And by the way, I will link these two previous analyses in the description so you can go and check them out for more free education. Now at the moment, from a daily perspective, what we can see that the market has created a higher high. However, when it came to the close that the market created here, from a daily perspective, the close, as we can see, is below the previous high, meaning that the market failed to create a level of previous resistance turn support here, because you need to have a daily close above that zone. However, we did manage to create this candle here. And usually when you have a candle like this with a very long wick and a green body, the next candles are supposed to follow through. And since on the monthly and weekly, we also expect bullish price action, there is definitely the possibility to see the creation of a proper impulse to the upside and for the market to break above this previous high. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see how lately net positions have been growing. In fact, we went from having 168k net positions up to having 193k net positions, steadily increasing with thousands of longs getting opened and shorts getting closed, reaching almost 300k longs and only 106k shorts from an institutional perspective on gold, which obviously is getting quite strong. Now, the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will successfully manage to break above this high, this previous resistance will be turned support here. So after a proper break of structure on the retest of this previous resistance turned support, inside of here what we will be doing with students is as usual being reactive and not predictive. The monthly, weekly and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So after a break on the retest of this previous resistance turn support, inside of here we will be monitoring price action with students from a 4 hour perspective and lower, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, at that point we will be adding gold to our watch list. And if the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside, and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.